Hi guys, in today's video I'm going to be comparing two of the most popular funds on the Vanguard platform, the Vanguard Lifestrategy 100% against the FTSE All World ETF, more commonly known as VWRL. Just to let you know, I've made in-depth analysis videos on each of these funds separately, so what I'll do is I'll link to those two videos in the description of this one. So in this finance and investing space, we are often told just to buy a global world tracker and that will do a lot of the hard work for you. And this is certainly the investing approach that I've personally taken. The last thing for me to say before I get started is this is not financial advice. I'm just simply sharing my opinion and thoughts. So I've made this chart, you can see. This will give you an idea of the things we're going to be talking about. So the first thing we're going to discuss is the fund type of each of the funds. So first up, the Lifestrategy 100. So that is a blended fund. So you might well be asking, well, what is a blended fund? This means it's actually made up of multiple other funds, both index funds and ETFs. You can see on the list that I'm showing you that these ETFs and index funds are targeting different markets around the world. Next up, onto the FTSE All World ETF. Of course, it's given away in the name. This fund is an ETF. ETF stands for Exchange Traded Fund. One of the biggest differences with exchange traded funds is that they can be traded live on the stock market. So you can buy at the live price if you have a trading platform. Now on that point, should you wish to buy VWRL on the trading platform other than Vanguard, one of the platforms that I use is Freetrade. Now if you sign up to Freetrade using my referral link that I'll post below in the description, you will get a free share and so will I. On Freetrade you'll be able to buy many different types of ETFs and individual stocks, and free money is always a good thing. Next up, we're going to be talking about the risk of each of the funds. Now both funds, you can see, are rated as a 5 out of 7 in risk. Now you might be asking, well, that is quite a high risk fund, is it not? And you are right, it is, and this is because both of the funds are what we call equity funds, so they invest 100% in stocks and shares. This makes it quite a volatile fund. I would argue they're not necessarily high risk, as long as you have a long-term investing horizon ahead of you. Over time, the stock market does trend upwards, but because both of these funds are more volatile, it can be quite a rocky road upwards. You need to brace yourself for this, know that drops happen and they should be expected, but over the long term, I believe the stock market will continue rising. Next up, the charges of each of the funds. So for this point, I'm going to be comparing the ongoing charge, often known as OCF. And you'll see that both funds have the exact same ongoing charge of 0.22%. This is great because this is a nice low cost fee to own each of these funds. Yes, you can get even cheaper than this on the Vanguard platform, including Vanguard's S&P 500 tracker known as VUSA at just 0.07%. So next up, we're going to talk about asset allocation of each of the funds. And I'm not talking about asset allocation as in stocks and bonds. Instead, I'm talking about whereabouts in the world the funds invest in. So as I said at the start of the video, it's often recommended that we buy a world tracker fund. So what this means is we invest all around the globe. Now the global market as a whole is made up in different percentages. So larger markets make up a larger amount of the global market. So the biggest market, which is North America, makes up almost 60%. Here in the UK, we actually make up around 5% of the world market. Now this brings me perfectly onto the Lifestrategy 100% fund. For the fund to be a world tracker, you'd expect it to invest roughly 5% of your money into the UK, because that is how much it makes up of the global market. But it's actually made up of almost 25% of funds in the UK. Now this is probably one of the biggest downfalls of the Lifestrategy 100 fund for most people, is its overweighting in the UK. Now we all know the UK markets haven't been performing particularly well over the last few years, which of course means this UK weighting is not ideal. Moving on to the FTSE All World ETF, this one is actually a world tracker fund, so all of the countries are in the percentage allocations that you'd expect. The one thing I must add here is it only invests in large and mid cap stocks, so it does miss out any small cap stocks. So if you want to invest in that, you're probably better off looking at a different fund. We'll be speaking a bit more about one of these in another video. Next up is the dividend yield of each of the funds. So the Lifestrategy 100% has a dividend yield of 1.43% at the time of recording. VWRL has a dividend yield of 1.27%. So you can see Lifestrategy 100 actually just beats VWRL in this comparison. Next up is the dividend type. Now what I mean by this is how the fund pays its dividend. So Lifestrategy 100% you can see is an accumulating fund, which is also often known as ACC. What this means is any dividends earned are automatically reinvested into the fund. Now this is a really great thing because it introduces something we all love, which is known as compound growth. VWRL, however, is an income fund. So what this means is every quarter you'll be paid your dividend. Now, unless you log in and reinvest that dividend, that amount will be sitting in your account as cash, so not technically earning you anything. Now, for more active investors and people that check their portfolios more, this may not be much of a problem, as we log onto our portfolio a lot and we can just reinvest these amounts when we get paid them. But for someone that wants a sort of sit back and relax portfolio and one that they don't have to check much, this is where I think an accumulating fund would work really well. You can sit back with your feet up knowing your dividends are always working hard for you and ultimately then earning you even more dividends. Now you eagle-eyed viewers may well have known that next to VWRL I have put some stars next to income, and this is because there is actually an accumulating version of VWRL known as VWRP. Now remember that free trade referral link I mentioned earlier? Well, if you head over onto free trade, you can also invest in the accumulating version of this fund, VWRP. So for the final box, performance, you will see it is actually blank, and that is because we're going to head over onto a different website. So we are now on the fantastic website morningstar.co.uk. I use this website to take a deeper look into index funds and ETFs, and it also has very helpful comparison charts. You can see I've already plugged in both the FTSE All World UCITS ETF, which is VWRL, and the Vanguard Lifestrategy 100%. VWRL is the blue line and the Lifestrategy fund is the green line, and you'll see that I've started off showing over a shorter time period of just 1 year, and the reason I've done this is to show that although the Lifestrategy fund is ever so slightly behind, they do track actually quite similar. That is, however, over the short term. If we go to the max time horizon, you can then clearly see VWRL starting to accelerate off around mid-2016. Now both of these funds start down here at a value of 100, and by the time we reach today, Lifestrategy is up to 293.03 and VWRL is up to a whopping 323.52. So it's quite a big difference, and you can imagine if you're investing multiple thousands of pounds, what a difference that could make. So the next video I'm going to suggest for you to watch is how to retire early here in the UK. I'll put a link to that one in the top corner of this video. Apart from that, I hope you found today's comparison video helpful. If you have any questions, don't forget leave them in the comments box below. I'll do my best to help, and hopefully I'll see you on another video very soon. Take care guys.